Hello, welcome to another Decentrader market update for Bitcoin. I'm Philip Swift, analyst at Decentrader, and I'm going to talk to you about where I see Bitcoin heading over the next few weeks. And now, before I do, please subscribe to this channel by hitting the subscribe button below, and also hit the like button, as that really helps us grow the channel too. We really appreciate that. And finally, nothing contained in these videos should be misconstrued as financial advice. These videos are for educational purposes only. Okay, so let's start with some technical analysis. We continue to expect Bitcoin to respect the fib levels on this fib extension that we've drawn out here, had on the chart for the past few weeks now. And once Bitcoin can convincingly break above this previous high of $59,000, we believe that should open up the door for a move up to our second take profit level of $70,000, which is this 1.618 fib extension level here. So our near-term price target is $70,000, having already hit our first take profit level of $55,000 last week. And to the downside, as long as Bitcoin stays above this 200 moving average on the 4-hour chart, which has clearly acted as important support for this entire move up since October last year, we believe the bullish structure will remain intact. So that 200 moving average is rising up fast now. It's approaching $50,000 today. So we expect any pullbacks to be minor, and don't expect them to go deeper than this level here before moving up to our target of $70,000. Now, Predator indicator is also confirming bullish on multiple time frames. Near term, a little bit bearish. We can see here the current candle just turning red, but it hasn't closed yet, and may indicate a short-term pullback. But higher time frames, 8-hour, 12-hour, and daily, continue to be green and continue to trend to the upside. And to learn more about Predator, you can head over to the Predator page on the Decentrader website. Now, one reason why we believe there may be some choppy price action in the near term is due to funding rates. So funding rates we can see here for Bitcoin across a range of exchanges. And what we are noticing in particular over at Bybit is that funding rates are jumping up particularly high levels. So we'd consider anything above 0.1 to be getting quite warm on the funding rate levels. And what we're seeing is that those over-leveraged traders are getting liquidated on the anticipation of a major breakout, and then that is then pulling back funding rates down to lower levels, which you can see here on the predicted funding rates now back below 0.1. So given the macro context is so bullish for Bitcoin right now, in our opinion, it pays to be patient and not get liquidated on these lower time frames when we believe larger moves are just around the corner. And one reason we believe that to be the case is that we continue to see the rapid reduction of Bitcoin available on major US and European exchanges. So here we're looking at the amount of Bitcoin held on Coinbase in blue and over at Bitstamp in green. And what we can see is that since the start of the year, there's been a major reduction in Bitcoin held on those exchanges. And the reason for that is that people are purchasing Bitcoin from those exchanges and taking them off and putting them into cold storage. That reduces the liquid supply available on the market and therefore is bullish, as we know demand is also increasing. So reduction of supply, increased demand, pushes price up, which is what we've seen and we are continuing to see over the recent weeks. Now, another chart which also suggests that supply is limited for Bitcoin right now is looking at the hodl waves for Bitcoin. So each of these colored lines shows us the percentage of Bitcoins that have not moved for a certain time period on chain. So the purple line shows us the percentage of Bitcoin that has not moved on chain for at least a year, the green for at least 2 years, and the blue for at least 3 years. And the one that is particularly interesting is this 3-year line here, as that is showing us that the percentage of Bitcoin that hasn't moved for at least 3 years is increasing. And that therefore tells us that long-term hodlers are not prepared to sell at these price levels. They are waiting and anticipating higher price levels, just like we saw at the early stage of the bull market in 2017. You can see this increase here. So it's likely, given the market psychology, that we see a similar pattern play out again this cycle, where we first see a reduction in 1-year hodling and 2-year hodling, as we're starting to see now in the early stage of the cycle, before then a final reduction in the 3-year hodling later on as Bitcoin goes much higher. Now, looking a bit near term, there is a question as to how miners, other participants in the market, are going to react to these higher price levels. And one way we can understand that is looking at the Pure multiple. That's one of the live charts over at Decentrader. And this looks at the amount of revenue being generated by miners in the near term relative to their historical norms. And what we see is that when the indicator enters into this red band here, that is telling us to be cautious, because miners are generating in US dollar terms a lot of revenue relative to historical norms, and we've seen that this has indicated major cycle highs. So when the blue indicator heads into the red band, we have previously seen major pullbacks for Bitcoin price in 2017 and in 2013, the major cycle highs, and also in 2011, the very early days of Bitcoin, where price was extremely volatile. So right now we can see that the indicator is just below the red band, but if Bitcoin does accelerate in price, as we're expecting to see over the next few weeks, then we could see this indicator head into that red band, which may indicate a need to manage risk, something we're certainly looking at over at Decentrader. Finally, another indicator that may suggest a near-term top, should Bitcoin start accelerating up over the coming weeks, is the Pi cycle top indicator. So another live chart over at Decentrader, and this indicator has picked the major cycle tops of Bitcoin to within 3 days historically. So in 2017 and also in 2013, both of those cycle tops within 3 days, and then way back in the very early days with fewer participants in the market, it was able to do it within 2 weeks, when price, you can see, was jumping around between $1 and $50. So if I zoom into last cycle, you can see the way this indicator works is that it uses 2 moving averages. The first is the 111-day moving average, and when that crosses up into the 350-day moving average times 2, so we're multiplying the values of that moving average by 2. When it crosses up into that green line, that has historically picked the cycle highs for Bitcoin. So that's 2017. You can see very similar thing if I zoom into 2013 as well. It was able to do the same there, very accurate indeed to those cycle highs. Now, if we zoom into what is happening at the moment on this indicator, what we see is that actually the orange line, the 111-day moving average, is now approaching the green line, very close to it. So if Bitcoin price does accelerate over the next few weeks, we may see these lines cross. No guarantee that this indicator will work again, as it assumes steady movement through an adoption process, but it is another indicator that is now worth paying attention to as it approaches critical levels. So we may have an exciting few weeks ahead of us for Bitcoin if price does accelerate up. Let's see if it plays out that way. If you do want to learn more about what we do, head over to decentrader.com, and you can find more out about our indicators and our analysis there. Okay guys, thanks for listening. Speak again soon.